Welcome to the deep dive. Today, we're cutting through the noise to understand the high-stakes world of investing. Specifically, we're looking through the strategic mind of, well, one of Wall Street's most talked about figures.
Right.
You've sent us a really fascinating stack of articles, research, notes, all outlining the top investment picks of Bill Ackman, the founder of Pershing Square Capital.
Yeah, and our mission for this deep dive, it's really to unpack Ackman's unique, very concentrated investment philosophy.
Okay.
We'll zero in on his current top 3 high-conviction bets. We want to understand why he's putting billions into these specific companies and what the underlying facts, from your sources suggest about their future potential.
Okay, let's unpack this then. We're going to explore what makes these particular companies so attractive to a long-term, high-conviction investor like Ackman is. And critically, what insights you can maybe take away from his distinctive approach. So our sources, they clearly outline that Bill Ackman's hedge fund, Pershing Square Capital, it operates with a very focused strategy.
Yeah.
It's not about spreading investments thin across, hundreds of companies, is it?
Absolutely not, no. The research highlights a core belief they have at Pershing Square. It's incredibly challenging, maybe impossible, to outperform the broader market if your portfolio just mirrors it.
Right, if you own everything.
Exactly. Ackman's team holds stock in I think it's about 10 publicly traded companies.
Wow, just 10?
Yeah, this concentrated approach, it allows them to deploy billions into these high-conviction bets and then commit to them for the long haul.
So for you, listening and looking for those insights, what this really means is that when Pershing Square makes its monthly investor updates or its quarterly SEC disclosures...
The 13 Fs, yeah.
Right. Those become a pretty significant signal for investment ideas.
For sure.
And here's where it gets, I think, truly compelling. His top 3 ideas right now, they account for over half of his entire publicly traded portfolio.
Over half. That's massive concentration.
That's a serious commitment. Okay, let's kick off with the biggest one then, Uber. This company makes up a substantial 19.7% of Pershing Square's portfolio.
Yeah, Uber. So the information in your sources, it indicates Ackman accumulated something like 30.3 million shares right at the start of 2025.
Okay.
He announced the position publicly on X, Twitter, in early February.
I remember seeing that.
Yeah, and then Pershing Square's first quarter 13F filing, it later confirmed it was, in fact, their largest single holding.
And what a start to that position. I mean, Uber stock climbed, about 55% since the beginning of the year?
Yeah, roughly 55%, hit a new all-time high.
And a big chunk of that rally happened right after Ackman's announcement.
It certainly seemed to help, yeah.
But okay, beyond the quick gains, what's the strategic long-term thinking here? Because, some might look at autonomous vehicles and see a major threat to ride-sharing.
That's a great point, and it's a common perception. But while some might see AVs as a threat, your sources suggest Ackman sees this as a profound opportunity.
An opportunity? How so?
Well, what's really fascinating here is Uber's massive customer base for taxi services. We're talking 170 million total monthly active users as of the end of Q1.
170 million. Okay.
I mean, this isn't just a big number. It's a critical asset for any autonomous vehicle company. Uber essentially controls the largest distribution network for future ride services.
Okay, so I think I'm getting this. Companies like, say, Alphabet's Waymo, the leader in self-driving cars, they aren't necessarily competitors, but potential partners.
Exactly.
They need Uber to access that huge customer network. The sources mentioned Waymo already has deals with Uber, right?
Precisely. Uber is positioning itself to be, indispensable, the platform. And financially, the company seems to be executing incredibly well. Well, look at the numbers. Gross bookings increased 14% last quarter. EBITDA grew 35% with improved operating leverage.
Which means more profit from each sale.
Right. Their revenues are growing faster than their costs. That's key. Plus, free cash flow saw robust 66% growth, and it's converting over 100% of EBITDA with limited cash expenditures. Very efficient.
Okay, so strong growth, strong cash flow. But what about that stock price jump? Despite that significant run-up, our analysis indicates Uber shares still look maybe fairly valued. We're looking at an enterprise value less than 23 times forward EBITDA estimates.
Right, and you have to put that in context. I mean, tech companies growing EBITDA at 30% plus often trade at much higher multiples than that.
So Ackman might see a disconnect there. The market isn't fully pricing in that accelerated profitability or the strategic position.
That seems to be the implication, yeah. especially when management itself expects over 30% EBITDA growth for the next couple of years. It suggests there might still be value there, even after the run-up.
Interesting. Okay, let's move on then. The second big holding, Brookfield. It makes up 18.4% of Ackman's portfolio. And the research shows he's been steadily building this position over the last 4 quarters or so. What exactly is Brookfield, and why is it so compelling to him?
Okay, Brookfield. It's a Canadian alternative asset manager. It's a huge enterprise, really. They operate businesses across different segments like real estate, renewable power facilities, infrastructure.
Okay, real assets mostly.
Yeah, typically stable, cash-flowing businesses. And that cash flow provides capital for further investments within their whole ecosystem.
Right. And there's this really pivotal connection here, isn't there? Their insurance business, Brookfield Wealth Solutions.
Oh, yes.
The sources highlight how it provides additional capital to float for management to invest.
That's the key piece.
It's that strategy Warren Buffett famously used to grow Berkshire Hathaway, right? And it's a strategy Ackman himself has publicly talked about wanting to use.
Absolutely. He's expressed significant interest in that model. So yeah, seeing it here in Brookfield makes a lot of sense in terms of his known interests. It's almost like finding a pre-built component for that kind of strategy.
Like building his own Berkshire Hathaway piece by piece.
You could see it that way. And if we connect this to the bigger picture, I mean, Brookfield has shown some impressive growth. They've compounded distributable earnings per share.
Okay, that's the cash available to shareholders.
Yeah, a key metric for asset managers. They've grown that at an average rate of 19% per year over the past 5 years.
19% average, that's strong.
It is. And management's quite ambitious. They're aiming for $6.33 in earnings per share by 2029. That translates to a 16% compound annual growth rate going forward.
16% CAGR target.
Yeah, and they just grew 30% in the first quarter alone. So they're starting strong towards that goal.
Okay, so with those strong growth numbers and targets, what does this mean for its valuation? Is it expensive?
Well, that's the interesting part. Our sources indicate that despite this impressive trajectory, the stock trades for just 19 times trailing earnings per share.
Only 19 times trailing.
Yeah, which the sources say is well below comparable companies in the space. It appears to undervalue its substantial growth potential.
Huh. So it seems like maybe a bit of a hidden gem in that sense. Strong growth, reasonable valuation.
It certainly looks that way based on the numbers presented, yeah.
All right. Finally, let's talk about Howard Hughes Holdings, or HHH. This represents 13.3% of the portfolio. And this one, it comes with an even more direct connection to Ackman himself. Tell us about that.
Indeed it does. So after a deal back in May, Ackman personally, Pershing Square put up $900 million of its cash for 9 million shares.
300 million, okay.
That gives Pershing Square a 46.9% economic stake and, critically, 40% voting control.
So, significant influence.
More than influence. He now serves once again as executive chairman of the company's board. He's directly at the helm now.
Right, back in the chairman's seat. And here's where it, I think, really deepens the understanding of his overall strategy.
Yeah.
Ackman's stated goal is apparently to transform Howard Hughes' existing real estate operations into a diversified holding company, much like, you guessed it, Berkshire Hathaway.
There it is again.
And his very first announced move to acquire or build an insurance business.
The float strategy.
That float strategy comes up yet again front and center. It seems to be a major theme.
It really does. It ties these investments together strategically.
Yeah.
But this raises an important question, right? What about Howard Hughes' core business, separate from this new strategic direction? Is there value there?
Good question.
Well, your sources state that Howard Hughes' core real estate business actually looks significantly undervalued on its own. Management estimated the net asset value, the NAV.
Okay, the underlying value of the assets minus debt.
Exactly. The NAV of its master plan communities, condos, operating assets. They estimated that at about $5.8 billion, per share numbers aside, $5.8 billion total at the end of last year.
Okay, nearly $6 billion.
And then you add the $900 million cash infusion from Pershing Square, which boosts that NAV even higher.
Right.
But the company's total market cap sits at just $4 billion.
Wow. Okay. So NAV potentially close to $6.7 billion, market cap $4 billion. That's a considerable discount.
It's a significant gap, yeah.
And that core business, it sounds pretty solid too. Howard Hughes generates strong operating cash flow, right? From selling plots to home builders and rental income.
That's right. Commercial and multifamily buildings. And because it controls the entire acreage of its master plan communities, it has this unique ability to just build enough to meet demand.
Control the supply.
Exactly. Which helps ensure strong returns on its land. So the remaining cash flow from that core business can then fuel these new investments as it diversifies under Ackman's direction into this holding company structure.
Makes sense. Use the core engine to fund the transformation.
Yeah, precisely. However, the new structure, it does come with some considerations. Howard Hughes will be paying Pershing Square $3.75 million every quarter.
A management fee.
Basically, yeah. Plus a 0.375% incentive fee for increasing the business's value above inflation. So there are costs to having Pershing Square run the show now.
Okay, that's a factor.
But for average investors, it also kind of opens the door, doesn't it, to put their money to work directly with Ackman.
Ah, interesting point.
And potentially gain access to private deals he might make down the line, rather than just following his public moves after the fact.
So it's like investing alongside him more directly.
In a way, yes. And the fact that the stock is trading well below management's NAV estimate, especially now with Ackman's direct involvement and this clear strategic vision, well, it certainly suggests it may be a compelling opportunity.
Lot to think about there.
Definitely. So today, we've taken a real deep dive into Bill Ackman's highly concentrated investment strategy and his top 3 high-conviction picks right now: Uber, Brookfield, and Howard Hughes Holdings. We've seen how his long-term perspective and that consistent focus on cash-flowing businesses.
And the floating.
And the powerful float strategy. Yeah, how that underpins these multi-billion-dollar decisions.
Yeah, and the clear structure and detailed insights from your sources. They've really shown us not just what he's investing in, but maybe more importantly, why.
The rationale.
Exactly. Highlighting those specific metrics, the strategic opportunities. It's a fascinating look at how a really focused approach can lead to these truly significant bets.
It really is.
Yeah.
And that leaves us with maybe a final provocative thought for you listening.
Okay.
Given the demonstrated power of concentrated long-term investment approach like Ackman's, how might identifying and deeply understanding just a few high-conviction ideas in your own areas of interest, whether that's investing, sure, but maybe also career development or learning a new skill, how might that change how you approach gaining knowledge or even making pivotal decisions?
That's a great question to ponder. Focus versus diversification in life, not just portfolios. Thanks for joining us for this deep dive.
My pleasure.
Until next time, keep digging for those insights.